Welcome to Influential Entrepreneurs, bringing you interviews with elite business leaders and experts, sharing tips and strategies for elevating your business to the next level. Here's your host, Mike Saunders.
Hello and welcome to this episode of Influential Entrepreneurs. This is Mike Saunders, the Authority Positioning Coach. Today we have with us David Garofalo, who's the CEO of Gold Royalty Corp. David, welcome to the program.
Mike, thanks so much for having me on.
Hey, you're welcome, and I'm looking forward to talking with you and learning from you because I know you're in a unique industry, and this is, the precious metals, and then when you think about, investments and where do we put money and how do we, move wealth forward or how do we make wise financial decisions, there's a lot that goes into it. So I want to dive in and find out how you are conducting your business as a company and personally and professionally, but get us started with a little bit of background on yourself and then what led you to this company.
Well, I've been in the mining business for over 30 years now, primarily in operating and mine development roles. Most recently, before I took on Gold Royalty Corp, I was the CEO of Goldcorp, and I engineered the largest gold merger in history, $32 billion between Newmont in your backyard and Goldcorp to create what's today the largest gold mining company by market cap and production. Before that, I spent equal amounts of time in the base and precious metal universe, building and operating mines with Hudbay Minerals as CEO, Agnico-Eagle as CFO for 12 years, Inmet Mining for 8 years. So very much focused on building and operating mines. So I have an operator's mindset, a mine builder's mindset, and I think that brings a unique perspective into the gold royalty business in Gold Royalty Corp.
Yeah, I mean, when you bring a vast background like that, it's really neat to, I'm sure you could probably write a book on, I learned this particular lesson from this experience, and, actually I learned the lesson because I made this mistake, or I noticed this was a problem, and working through the problem, we solved it. So I think that is really neat when you can bring that body of work to, your current company, and now you focus on this, and you grow, and you amplify what you're doing. I think that is spectacular. And I'm looking here at your website, and I see that your stock info, GROY, today is up, 2.54%. So tell us a little bit about GROY and how that works and what people can be learning from what you guys do in the industry.
Well, we're related to the mining business, but we're not in the mining business per se. We're purveyors and providers of capital to mine explorers, mine developers, operators that are looking to de-risk, build out their operations, expand them, and we provide that capital expecting to get a royalty back on the properties. In other words, we get a percentage of the top line of the revenue. And so we're not exposed to operating capital cost inflation, but we provide our investors with optimum exposure to the gold price, leverage to the gold price. So as the gold price goes up, our revenue goes up. And also we provide exploration upside because our royalties not only on the existing reserve and resource, but any expansion geologically of that reserve and resource through the exploration efforts of our operating partners. So really, it's almost like owning physical gold with exploration upside, completely insulated from operating capital cost inflation. And that's why after 32 years in the business, I've repositioned myself. I've gone into financing these mines rather than building them ourselves, because I'm a big believer in the macro environment for gold. I think we're in for a long bull run in gold in this current inflationary environment, but I'm also concerned that inflation will affect the profitability of miners. And so I'm searching or looking to basically insulate our shareholders from that operating capital cost inflation risk. So by being in a royalty vehicle like ours, you get that top line exposure while insulating yourself from operating capital cost inflation.
I don't know your industry, but from what you just said there and from the overview on your website, it sounds to me, so correct me if I'm wrong, but this feels like being a venture capitalist in the mining industry where you come alongside people already doing mining for gold, so really niche market, and you're providing some financing and funding to help them accomplish what they're doing, and then you and your investors get a rate of return based on, the blood, sweat, and tears of people out there doing the deal.
Yeah, I think that's part of it, but also we do invest in mature operations as well that are looking to be expanded. So if you look at our portfolio of royalties, we have 192 royalties within our portfolio.
Okay.
And it's a broad spectrum of royalties from early stage exploration, which would be, tantamount to doing venture capital. It's high risk. potentially higher return. But we also have, within those 192 royalties, 28 royalties that are either cash flowing today or in development and about to cash flow.
So it's not all spec.
It's not all spec. In fact, quite often we're funding the expansion of a mature operation, or one that's on the cusp of construction. It's been demonstrated to be economic, but for an additional top-up of capital from somebody like ourselves, they're going to start construction, and so there'll be cash
similar in the real estate industry, similar to a REIT. A real estate investment trust, someone might, like in that portfolio of investments might be a fully functional, massive hotel chain or, apartment complex, and it might be a speculative, project. So, you've got a broad array there. What are some of the things you're looking for as far as, maybe even this year, last year? What are some significant accomplishments that you guys have worked on and focused on that bringing to your market and your investors?
Well, an excellent question. We only actually IPO'd on the NYSE American a year ago, March 11th of 2021. And on the strength of an initial royalty portfolio of 14 royalties, we raised $90 million US and achieved a post-money valuation of $200 million. And then we went about actually consolidating what's a highly fragmented industry of small royalty players. We bought 3 of our peer companies over the course of last year, Ely Gold, Golden Valley, and Abitibi. And what that did is effectively quadrupled our size, expanded our royalty portfolio from 14 royalties to 192 royalties, and brought in cash flowing royalties. And now we have the largest compounded average growth rate in revenue in the industry on the royalty side. So we're going to see our revenue grow over the next 3 to 5 years at about 60% per annum on a compounded average basis. And that's allowed us 10 months after our IPO to introduce a dividend.
Oh, nice.
And so we are paying just under a 1% yield currently. And given our growth in revenue over the next 3 to 5 years, we have a high degree of confidence we're going to see that dividend grow over time as well.
So when I'm hearing royalties and investments and your portfolio and body of work, how do you determine where the next project that you guys are going to invest in? So I'm certain, similar to a VC, you guys will have people that bring you potential investments, or you seek out potential places to put your investors' funds. What are some of the ways that you are going to evaluate those, and how do you locate them?
Well, it's about people at the end of the day, and I'm very happy and proud of the fact that we've grown so quickly in terms of a royalty portfolio. We've acquired over 190 royalties to complement the 14 that we have in the portfolio on the IPO. But we also curated a really, really strong board of management, a lot of people that have similar experience levels to my own, over 30 years typically in our board of management. So collectively, our board of management has over 400 years of industry experience. And that gives us 2 distinct advantages. One is it gives us a clear-eyed view of the underlying risk of the things that we're looking to invest in and take royalties back on. We understand how operators think. We understand how mine builders think, because we were operators and mine builders for decades. But the other thing it gives us, given the seniority of our board of management, is it gives us unmitigated access to anybody in the mining industry in the world. It means that we can get access to opportunities and hear about them before our competitors can. Yeah. And many of our competitors are well-run companies, but they're not run by former operators and mine developers. They're typically run by former bankers, financial engineers. They don't have that unique perspective of actually having built and operated mines and understanding the underlying risk, and having that kind of access that a board and management of our seniority affords us.
You really touched on a few minutes ago, that your company and your industry is poised for great growth, given the inflationary market we're in. And without getting into details of what that means and, stocks, bonds, mutual funds, this is an investment that is different than placing your money in a mutual fund or buying this stock or this bond. This is a different kind of investment. So can you compare, investing in a royalty company like yourself, even to just buying gold, because that's different? And then how would that be a good way to balance your investment portfolio with your investment manager?
Well, look, I think you have to make the case for gold as an asset class. And I do believe we're in an inflation cycle, unlike one we have seen since the 1970s. And I think we're deeply into double-digit territory in terms of inflation. I know the headline number is approaching 8%, but the reality is if you're putting fuel in your car, food in your stomach, or a roof over your head, you're deep into double-digit inflation territory. We haven't seen that since the 70s. At that time, when we had similar signals in the 70s that we have today, we had oil shortages, we had supply chain disruptions. I remember I was there back in the 70s in my teens. I remember the lineups at the gas stations, the empty grocery shelves. We're seeing those sorts of signals that indicate that we're in for a long inflationary cycle. We had easy money after Nixon took us off the gold standard in the early 1970s, and we saw significant spending and money printing to fund wars. In the case of Vietnam in the 70s, today we have wars on multiple fronts that we're trying to fund. So it's very, very similar signals. History may not repeat itself, but it certainly rhymes, and this clearly rhymes with what we saw with the big inflationary cycle in the 70s. Gold ran to $850 an ounce back in the early 1980s as nominal interest rates started to pick up, but inflation was accelerating. If you inflation adjust that to today's dollars, that's $3,000 an ounce. Gold is just below $2,000 an ounce now. That's the case for gold. And then the question you have to ask yourself as an investor, how do you best position yourself to enjoy the upside of gold and also protect your capital against the insidious nature of inflation? It eats at your spending power every day. And certainly you can buy physical gold. And I own some physical gold, typically 15 to 20% of your portfolio in physical gold to protect your capital against inflation. The other way is to buy the mining equities. And so the operators, the ones that actually operate and produce gold, I would say that's a good way because they have leverage to gold in their profitability, in their margins. But of course, they're in a dynamic cost environment. They're not immune from inflation. And so their margins are exposed to inflation like the rest of us. Royalty companies completely insulate you from that inflation. And it's been demonstrated that royalty companies outperform both the commodity and the miners in a rising gold price environment by 2 to 3-fold because they provide that top-line exposure, the exposure to exploration upside while completely insulating you from cost inflation.
I love that word, insulate. So like when you're thinking about, we eliminate risk. Well, a lot of companies that would talk about risk, you can't eliminate anything, but we can mitigate risk. And you said the word insulate. So that's kind of like, okay, that's not a wiping it clear of, because there's always risk in anything. But talk a little bit about insulation versus risk in royalty companies, and then merge that into, you're not the only royalty company out there. What sets Roy apart from other royalty companies?
No, it's an excellent question. I mean, what we're trying to do is mitigate cost inflation by taking just the top line exposure. And so when I say insulate, I think it's synonymous with mitigate. And that's the important thing is you want the upside that comes with gold in an inflationary environment without actually having that eat away at your profitability, at your returns as an investor. And I think that's what the royalty companies provide. And it's, there are quite a few royalty companies in the space. There are the large cap players like Royal Gold in Denver, Wheaton Precious Metals in Franco-Nevada. Those are the three, I would call them category killers in the space. And they're typically trading at 2 to 3 times the underlying value of their business. And that's a blue chip type of valuation. And then there's the rest of the universe that tends to be smaller cap, sub $2 billion market cap. Those bigger ones are typically $20 to $30 billion market capitalization, so they're very, very large. The sub $2 billion companies are typically trading at a discount to the underlying value of their business, below 1 times. By creating scale, as we've done, by starting to consolidate what's a fragmented sector, because there's probably a dozen of these smaller royalty companies, we've been consolidating them and trying to create a mid-tier company where none exists right now. And ultimately, we think we're going to get ourselves to a $4 or $5 billion market capitalization, which is big enough to matter to a broad institutional investor universe, but small enough to grow meaningfully. And we think in doing that, we'll attract a growth multiple that's superior to even the seniors. Because the seniors, while they're big and they're blue chip, it's very difficult for them to grow meaningfully and add per share value creation because of the scale that they've already achieved. Creating that mid-tier company, filling that void, we think will provide a significant re-rate opportunity for our shareholders.
Yeah, and I love when you're describing that. That is a way to set yourself apart, but not in a way that is so different that people go, that's a little out of the outer reaches of our comfort zone, and now we don't feel comfortable because what you're talking about is crazy talk. So what you're saying is more, here's where we are in the market, and here's where we feel our sweet spot is in delivering that, mitigated and insulated against risk, and here's where our superpower is in reality. So it's really something that I really love how you laid this out, and how you're really making a difference in the actual industry, and it's been an education to me, because who would have thought? You hear about mining companies, but then you never think about companies that invest in and allow those to be amplified. So is your company something that the individual investor can reach out to and learn more about to invest in, or do you work only with, maybe the mutual funds or hedge funds, things like that?
No, not at all. We have a very significant retail following, and we're very proud of that. A majority of the capital we raised in our IPO of $90 million came out of the retail environment in the United States. And as a result, we have a very broadly owned share, and it's one that's highly liquid. We trade typically $3 to $5 million per day on the NYSE American. So we're quite liquid. It's easy to get in, easy to capture profits when you're ready to do that. So getting in and out of the stock is not an issue. And we're GROY, as you said, GROY on the New York Stock Exchange American. And you can find out more about us on goldroyalty.com. You can sign up for a newsletter, call our 1-800 number, send us an email. I quite often respond to individual shareholders. Love to talk to them, talk about the gold price environment and how we're going to participate in the significant upside we see in gold.
I love it. Well, David, it's been a real pleasure talking with you. I love what you're doing in the industry, and we'll make sure that your website is directly linked in the show notes, but goldroyalty.com, and we'll make sure that we make that available to our listeners. Thank you so much for coming on. It was a real pleasure talking with you.
Well, thank you for your time.
You've been listening to Influential Entrepreneurs with Mike Saunders. To learn more about the resources mentioned on today's show or listen to past episodes, visit www.influentialentrepreneursradio.com.